And now it's time for our main topic of episode 104 of the Security Token Show, with this time the main conversation being around DeFi and the SEC. We actually had quite a riveting conversation last time about the little gray area about the crypto regulation between the CFTC and the SEC. But as we announced earlier on the show, DeFi Money Markets was fined for actually selling unregistered securities in a DeFi platform. So this is the first time that we've ever seen the SEC officially go after a DeFi platform. So we figured we'd take the time to dive right into it with you all.
So if any of you are listening and you're still a little unsure about this term DeFi, it stems from about a year, 18 months ago, and it stands for decentralized finance. And this is essentially leveraging a lot of the blockchain-based solutions that we talk about here on the show, as well that are used in the cryptocurrency industry to try to automate a lot of the traditional financial services. And so DeFi, I really think, has four main pillars. Collateralized lending, which is essentially removing the middleman from lending experiences when you have an asset and getting it from somebody else. We've got permissionless trading, like we've seen with decentralized exchanges like Uniswap that allow anyone to swap any of their different assets from any others. You have programmatic stablecoins. So this is creating stablecoins that hold value over time relative to many different factors that allow for international trade and all these kinds of settlement from lending and a lot of these different pieces. And then finally, we have automated market makers. And this is the idea of creating liquidity for these different assets by incentivizing users to participate in the protocol instead of needing to rely on third parties.
I think you nailed it, although even further, DeFi may expand into other aspects. But the whole point is that decentralized part. The very fact that the idea is there is no central operator, not a company, not a person that's actually operating the platform. These are all based on blockchain solutions leveraging smart contracts to enable a digital ecosystem for people to participate in these variety of services here that you've just pointed out, Kyle.
Absolutely right. So you're essentially just taking the smart contracts, which is just automation. How do we automate the financial markets? How do we automate financial services? And that's where we start to get into some situations here, like with DMM, where the SEC jumps in and says there's maybe some issues.
Well, if you don't like banks, then obviously you don't like regulation, and here we are. So DeFi is all about pushing the boundaries, which is why we expect that this is the first time, but not the last time, that the SEC is going to start getting interested in this space. In fact, we've seen Gary Gensler, who's the current SEC chair and commissioner, saying that he actually thinks the DeFi markets need to be regulated. Anything with lending, anything with securities follows under their purview. So they probably will start getting a little bit more active within this space, given the fact that they can't have so much control on what is considered a decentralized platform, which is what makes this whole thing so interesting.
Yeah, and so we've seen the differences in how they try to enforce this. Certainly with more centralized parties, kind of like with DNM, where there was an executive team that could shut down the protocol at any given time, it really wasn't fully DeFi. Because what we see in the decentralized financial space is that a lot of these protocols, somebody writes the code and then they launch it. And they launch it without any ability to shut it down. So it starts to get into these situations where, somebody might get in trouble. Like, for example, Uniswap delisted a couple tokens that they were concerned about from a regulatory perspective from their front end. So when you go to uniswap.com, you can't trade it. But the protocol that's being used by many other platforms is still able to offer the same services because Uniswap themselves cannot do anything about it.
That's right. Uniswap, the company, is removed from Uniswap, the DeFi protocol. And actually, Gensler, we actually just talked about this last week. There's even some issues with the CFTC, most recently with their head coming out saying that Ethereum is officially, a commodity, not a security. This might have implications on other DeFi platforms. And so we're definitely going to be interested in that, but go check out episode 103, our last week's episode, our main topic, where we really dive into that.
Yeah, it's fascinating stuff here because we've got DMM, we've seen Uniswap trying to step back, even Binance, as we've covered many times here in different episodes. Check out our main topic on Binance and what's going on. I think that's 102, and there's a lot of great things happening. But the other problem is that some people, including the CFTC chairman, from a commodities perspective, is saying that the SEC is overstepping their bounds. And so we'll have to see how these things are resolved over time.
The SEC is overstepping its bounds, and meanwhile, it's asking for more. So we'll see what happens. But we've already seen some cases where investors, if that they would be seen that way, certainly could be of an issue. We had a Poly network, right? They actually announced that they had a hack in their DeFi platform for over $600 million. So in this case, luckily the hackers did return the money after working with the people behind the protocol, but that shows you that this isn't necessarily a perfect science and solution, which is why, of course, the SEC is certainly very, very interested in making sure that if there are investors participating in this stuff, they are protected and they have the support of the SEC.
And so you may be wondering, what does this all have to do with security tokens? Because DeFi is a new term. Certainly, it's not the DeFi show, it's the security token show. And the reality is that security tokens are really not affected by many of these clampdowns from regulatory bodies because security tokens by nature follow all necessary securities laws. We've been, in fact, as we saw in my company of the week, the SEC has actually issued a no action letter to companies that are trading security tokens to allow them the flexibility to do that successfully. And even Chairman Gensler has come out and said, as long as they follow securities laws, is all kosher. So as long as we're taking these regulatory steps forward, we don't have a lot of worries from our side.
Yep. So who knows what's next? We certainly think that the SEC is going to get a little bit more active. We certainly think DeFi will continue to push the boundaries as well as lead to new innovations that hopefully, with the right partnerships and regulations in place, centralized firms can also take advantage of that. And so with that, if you have any questions or feedback or thoughts, please always reach out to us. And we apologize if we're sweating. The AC went out in the office today, but here we are anyway. We want to get you that content. And so with that, please make sure we see you again next Friday. Follow us on Twitter. Check out stomarket.com. That's where you can get all of the trading information, all of the news, everything you need to know about security tokens right there, including our very own blog, which has a heck of a lot of new cool content for you to go check out.
Thanks to our amazing team. I hope you enjoy all of the great new people and faces that you're seeing, as well as shout out to Nick, who does all of our filming and production and have done an amazing job. So happy tokenizing, and we'll talk to you next week.
Cheers.